Traders, in this video we're going to talk about how to identify high probability setups using price action rules. Now on the chart we have a bearish structure, we have a bearish downtrend. And if I want to trade this downtrend successfully, I need to identify the proper pattern, the proper channel. Now I already have a channel number 1, which is a very shortened channel which had a break and a new extreme. And this is important. I'm drawing these channels because I want to follow the trend line rule, which says after break of a channel, traders will attempt to create new extreme. At the same time, I have to draw the channels for the short-term corrections that go against the overall trend. You guys can see there's a uptrend working higher, break of the uptrend, new extreme retested, price push below exponential moving average indicating bearish momentum, and now the downtrend is resuming. Now this is still pre-market structure, pre-market analysis that I'm doing before regular US stock market open. And at this point on, this downtrend is looking quite strong. So I have the channel number 1. Now I need to identify the channel number 2 to the bigger pattern. Most of the times you will identify the bigger channel of the very first few swings. So I use these first 2 swings, but I notice that I'm coming short off of these highs and there's a lot of room at this point on. I didn't really like that because the channel is supposed to fit nicely. So what I did, I just curved it a little bit at the very start and my channel ended up being something like this. You guys can see there's a little break, but a lot of times during the pre-market session, there can be early break and traders will not really count it. If I'm just going to copy it and put it at the bottom, this would really convince me to follow this channel. Notice how nicely this channel is holding at the bottom, really confirming the geometrical formation. And now this is looking like a great channel working lower. And now I have my goal set clear. Only thing I'm looking for is a high probability setup at the key entry point. Now market opened somewhere around this area. We actually had a 2-legged pullback, high probability setup at the key entry point. It is a tiny little bar. Had this bar closed a bit more bearish, this would have been great entry. But notice, regardless, first leg, correction, second leg, uptrend played out with the break and new extreme. So this would be a first decent entry. At this point on, I was a little bit worried about potential wider channel because we just came off the low of the channel. For that reason, I think this is a little bit aggressive because you just came twice from the low of the channel and you may push higher strongly just like we did here. Now, we're bouncing off the low of the channel. You expect for price to reach the top of the channel. Notice we have a shortened uptrend, just like we had here. Break of a channel, new extreme form. Okay, so now that I saw this, I figured I expect for price to push back below EMA and maybe the trend line is a little bit tighter again. So what I did, I tightened it a little bit like this, just copied it, put it at the bottom, fits still very nice, very perfectly fitting. And now I get the confirmation even off the top. So this is a nice channel. Okay, so now I am at the key entry point and price form a new high where I reset the count and I have a first entry long, pullback, second entry long, failure. This is the first great high probability setup for today. Why? Uptrend played out with the break and new high, so you know that the buyers are no longer in control. The downtrend is in play. The major trend line is coming into play. This is where all the magic happens. All the smart traders are selling at these highs and you have a failed second entry long because every second entry long that goes against the major trend, you treat it as a potential failure. So this is where you go short below this bar right here and what a gorgeous first entry for the day. I actually took this entry right here and you guys can see you could have had 10 point worth overrunner. So this is a simple price action. You're not complicating anything. Only thing that you're looking for is a 2-legged pullback at the key entry point or failed 2-legged pullback. Price created low that is higher than this, looks close to a double bottom. So this is where you reset the count and notice you're drawing the shortened trend lines. You have a break, new extreme form. You have a first leg up, pullback, second leg up. So price is forming the 2-legged pullback. Uptrend played out with the break and new extreme. And notice what you have. I actually drew a little bit tighter. There is actually not a break. Let me just slightly adjust it. Yeah, I like it a little bit better. Like this. First entry short, pullback, second entry short, big bearish bar, off the major key entry point where all the magic happens, where all the smart traders are selling, and uptrend played out with the break and new extreme. Simple price action, high probability setup again. You guys can see this is the price action trading that you're supposed to be following. And if somebody is telling you that the price action doesn't work, they obviously don't know what they're talking about, because if you identify the channel, which is quite doable at the start, you guys can see you have a high probability setups off of these highs, and this is where the movement is generated on the chart. Now, price created a second entry short, push below EMA, and then it formed a lower high. But this lower high at this point on is quite close to this triple bottom. And notice it is still part of this big one leg down. There would have been better lower high had there been stronger correction, let's say one bullish bar at least, and then lower high. This is still part of this big bearish bar working lower. So you want to be a little bit careful going short directly into these lows right here, even though the downtrend is present. So the support is not that important, but you never want to risk the entry so low. Price created a failed second entry long again. Very tempting entry, new high, first entry long, second entry long, failure. And you figure that traders are probably going to get trapped going long on a second entry long, paying attention to the support, which has no significance on the bearish structure. But once again, you're shorting very low of the day, and I don't consider this a safe entry too much, but you're definitely not picking an entry that doesn't make sense. It is a failed second entry long off the EMA in downtrend, and you probably trapped them good. Just a little bit aggressive shorting the low of the day. This is what you would see, very low of the day. So it is better always to sell highs, to sell these pullbacks. You want to sell these corrections. The deeper the pullback is, the better. It's counterintuitive, but this is where you have to force to sell. Price created new low, first entry short, pullback, second entry short. Same thing here, two-legged pullback, EMA keeps holding price, and now this is not only second entry short, this is also breakout pullback. Price broke this triple bottom, this small little key level, pulled back, tested it, and now you can sell. You never want to sell in its breakout phase. You want to pull back and you want to sell the breakout pullback. So this is a third high probability setup and a two-legged pullback. Price pushed lower, form lower high, and lower high confirmation of a second entry short off the EMA. I took this entry myself. I got stopped out here. I'm not going to mark it because looking back, it is not such a great entry because it's quite close to these lows, similar to this setup right here. It's quite close to these lows, but I got stopped out here. I was 1-1 at this point on, but I liked it as a second entry short, lower high confirmation. EMA kept holding price, and I figured we would have made at least a scalp pushing lower, but because at this point on, take a look, this is looking like quite a strong bearish downtrend. There are no signs of a bullish momentum at this point on at all. Notice we are failing to reach the bottom channel here, so that may potentially indicate that we will break the channel. Channel we are breaking, following the price action, so I'm going to draw the short-term trend lines. We have a break of a channel, new extreme form, and if I'm going to take the entire structure into consideration, remember the trend line rule, I still expect to get new extreme. So after uptrend played out with the break and new high, at this point on, only thing that I'm looking for is to get retest of the new extreme low that is going to be lower than this lowest low in this entire market working down. That's what it means to retest the new extreme, because we have a low that is the lowest low in this downtrend, and new extreme is a low that is lower than this low right here. Trend played out, price is pushing below EMA, and only thing that I'm thinking about is this, either lower high or failed second entry long. Do I get it? I don't. Price just pushed lower, pushed higher, pushed lower, pushed higher above EMA, so I don't really get an opportunity to take a high probability setup. You guys can see EMA completely flattened, we're swinging up and down, but the structure is still bearish downtrend. I still need to get new extreme according to rules. I don't want to just start looking for longs just yet. Only thing that I'm paying attention to is for these uptrends to play out, and then I want to go short. Notice price formed a new low, and we have a first entry short, pullback, second entry short, and we have a new high, first entry long, pullback, second entry long, failure. Now, this was a great entry had the signal bar formed better. First bar is big bullish bar, and the second bar is almost an inside bar of this bar. Big stem at the bottom, form horrible, but it's a first entry long, second entry long failure, and a first entry short, second entry short. Off the EMA, on the bearish structure, this would have been otherwise great entry. And similar right here, first entry short, second entry short, but form bad, stacked, lot of stems, not really a great way to enter this. Now, you're watching the right side of the market like this, you have a new low, but if I'm going to zoom out, take a look how strong this downtrend looks. In price action, there's a point where the downtrend is so strong on its own, where even after you have a new low, it looks too strong, and I'm still leaning towards the fact that we may continue pushing lower. Notice we created over 80 points, 90 points almost move down. So that's not a tiny uptrend. I'm still respecting this downtrend, and I still think that we're going to potentially keep pushing lower. This was the reason where I located this channel, something like this. Just gonna copy it, put it at the low. I'm using the first few swings, and notice price is pushing lower, creating new low, first entry short, pullback higher, second entry short, failure, but you don't want to go long here. Now we have a potential downtrend. Structure is still looking quite a strong bearish structure. This is what you're looking at the very right side of the chart. Notice you're trying to reverse this entire downtrend working lower. You just have to be patient here. We have a failed second entry short failure. We have a lower high after second entry short failure, which I normally like. But once again, bullish signal bar, then bearish. And at this point, it's starting to get a little bit stacked. Normally, I would love this lower high after failed second entry short. They like to trap traders like this, but you have to be patient. Then you have a new high, first entry long, second entry long failure. But it's too stacked. So you're at the key entry point. You can feel that price is going to push lower, but the congestion can a lot of times trap you, stop you out, and then it's going to go where you thought it was going to go. So you cannot take any entry in this small little congestion, EMA in the middle of these bars. Once the EMA gets in the middle of these bars, that's the worst type of congestion. Notice what you have. Breakout, pullback pattern. Same thing you had here. Breakout, pullback pattern. Breakout, because most breakouts of these trading ranges will fail. So you guys can see break out of this model of congestion, pull back, test the breakout area, and then you have a new high right here because we have a matching highs. First entry long, pull back, second entry long, failure. Great high probability setup, failed second entry long, below trend line, below EMA, 2 high probability setups and 1. Notice we have, trader asked me a question about this. Trader treated this lower high as a breakout pullback pattern. And the idea of this trader was correct, just the timing was a little bit off. And this is similar pattern to lower high right here. When you're trying to treat this as a breakout pullback, doesn't this look still like one leg down? This still looks like a part of the breakout phase. This looks still like a part of this big bearish leg down. Even though technically we triggered higher and reversed down, there is no correction. This is a visible correction, 1 or 2 big bullish bars, and then you want to go short. This is still looking like a part of the breakout. We broke lower, then we pulled back, and then we trade out lower again. So when you're taking these lower highs, be careful. You don't want to be forcing it too much. These are still part of the breakout phase, the breakout leg pushing lower. You want to see bullish bar in between or some sort of stagnation. You just don't want to see this one leg pushing lower and still feels like a one leg down. All right, new high, first entry long, second entry long, failure. And you guys can see what the price action trading is about. You're only waiting for price to come to your key entry points, because that is where the price is turning down from, and you're waiting for high probability setups, either two-legged pullbacks or failed two-legged pullbacks against the trend. Price is pushing lower, again new low formed, first entry short, pullback, second entry short. I didn't mark this setup. Why? Because short-term uptrend is in play. Once the short-term uptrend is in play, that is indicating that buyers are still in control, and a lot of times when you have a break, you have at least attempt to create new high. So at this point on, you're waiting for a lower high, confirmation, you never get it, you got lower high all the way down here, you don't want to take, and then you have a new high, first entry long, second entry long, failure. But you definitely don't want to take it now because it's getting too stacked. And notice price is once again failing to reach the bottom channel. Each new push down is smaller and smaller, and now you're starting to go sideways. This is not an area where you want to go short. You want to go short on a second entry short, but the uptrend is in play. So the last hope is to get lower high right below EMA. You never got it, and then you have to be patient. Price broke the channel, and you're expecting to get new extreme of this downtrend. Price created a small break, attempt to create new high, and created a failed second entry long. I went back and forth whether to mark this or not. I like this trade, risking it. I didn't get filled here, but I liked risking it even though it's above the EMA. That's the issue here, because you have a new high, first entry long, second entry long, failure. Had it close below EMA, 100% easy high probability setup. Like this, you're taking a chance, and trading is about probability, so you have to be aware that this trade is riskier than it would be normally below exponential moving average. But if you combine this bearish structure, downtrend needs new low, uptrend had a break, attempt to create new extreme, the odds are really high that the price is going to push lower. And this is where the structure started to be really unclear, because notice at this point on, you just have a bunch of V-shaped reversals, move up, move down, move up without any higher low, lower high, failed second entry long or short. No good way to either capitalize on push below EMA or push above EMA. Price push higher, and we have breakout pullback, and we have a sort of like a two-legged pullback of multiple key entry points. I didn't like it at the time. I only like it here in hindsight because I was still expecting for price to pull back in this trading range, because I treated it as a failed breakout. We have a double top, so this is technically just a first entry, but you can see first leg pullback, second leg. But you don't want to go short unless you push below EMA. But looking back in hindsight, the EMA kept holding price so many times, the spike and a channel formed, even the resistance now acts as a support. Quite a nice reversal bar. You figure that it's probably going to work for a scalp. Price reversed higher, is pushing back down, new high, first entry long, push below EMA confirming the bearish momentum, okay. Now this is indicating that the bigger bias is coming into play. This is still very bearish looking structure. Take a look. Every single bullish correction is very minimal. So now that we're pushing back below EMA, I'm thinking short again. But we don't get a failed second entry long. New high, first entry long, failed second entry long. This is where you expect to get a failed second entry long. There is no trigger for second entry long, so you cannot take this entry. And the failed second entry long form all the way down here, which you cannot take as well. And here you have similar situation. You had right here. You had a new low, first entry short, second entry short, but it's far away from EMA, and you cannot take entry far away from EMA. Then price formed a double trap, trapped everybody going short too early, and everybody going long too early on a failed second entry short, because the downtrend is in play. It needs new extreme. However, this uptrend is in play. So what you want to see break, lower high, and then take the lower high. But there was not one tick higher for lower high to trigger. Market still just pushed down. So unfortunately, no entry here. Only first entry here again. Tempting double test, double top. But I really would have preferred to see second entry short here. And after that, there is really no clean entry because market is about to close. But you guys can see another downtrend working lower, little break, new low, and price is basically about to close. So good setups at the start. This is basically a great example how price action is working. And you can find this channel fairly easily. If you can't find the channel off the highs, you can find it off the bottom. Okay, if you're clueless about the highs because you don't want to have a break, just draw it off the lows. You can't deny how price is nicely fitting off the lows like this. And market geometry is a real thing. Don't listen to anybody who tells you that doesn't work. So you will just copy this, put it at the top, and you play around with this. And once you see you're approaching this, you can just slightly adjust it. And now you have a confirmation. So you nicely wait for failed second entry long, and then you get a confirmation again. So this channel could be easily found. Don't start looking for long just yet. This correction took a little bit of time, and this may start forcing you to think that it's about to go higher, but no, you always are leaning more towards the new extreme because that's according to rules, and price indeed created new extreme. And once the trend is so strong, you want to keep continuing thinking bearish. All right, so I'm going to wrap it up. Hope the video was helpful and educational. I'm going to see you guys in the next one. Take care, everybody.